Stocks fluctuate as geopolitics continues to set the tone. Following negative start to the week, global equity markets turned positive despite a hawkish message from Powell. The Fed chair said that the central bank could proceed to more aggressive half-basis point rate hikes in order to fight the elevated inflation. On the geopolitical front, peace talks between Russia and Ukraine failed to make substantial progress on key issues, thus capping gains in stocks globally. As such, U.S. stocks bounced on Tuesday as investors digested Powell's latest comments on interest rates. As such, equities resumed last week's ascent amid the lack of significant news on the geopolitical front. The Dow Jones rose 0.7%, the S&P 500 gained 1.1%, and the Nasdaq Composite jumped nearly 2%. In individual stocks, Nike shares finished 2.2% higher to gain more than 5% in extended trading after the company reported strong results for its fiscal third quarter due to robust demand in North America. Asian equities were mostly higher to hit three-week highs on Wednesday, with tech stocks leading gains. The MSCI's broadest index of Asia-Pacific shares outside Japan rose 0.6%, while Nikkei 225 rallied 3% to touch a two-month top. Hang Seng in Hong Kong advanced 1.21%, while Shanghai Composite advanced just 0.34% amid lingering concerns over COVID-19 cases in China. In Europe, however, stocks closed lower on Wednesday as investors continued to weigh risks from the situation in Ukraine. Ukrainian President Vladimir Zelensky has called for more pressure on Russia from other countries. The Stoxx 600 in Europe index closed 1% lower, snapping a five-day winning streak. Adding to investor worries, the UK inflation came around at an annual 6.2% in February, its highest since March 1992, as rising fuel and energy costs continue to push consumer prices higher. Of note, oil and natural gas prices resumed their advance after Vladimir Putin's plans to demand payments for energy export in Europe in rubles. Wall Street stocks eased on Wednesday as oil prices rose, renewing inflation concerns. As energy stocks led the gains, Hess and Diamondback Energy were the top two gainers on the S&P 500, rallying about 4.6% and 3.9% respectively. On the negative side, however, Adobe shares fell nearly 10% after the company forecasted lower than expected profit and revenue in its fiscal second quarter. As such, the Dow Jones Industrial Average dropped 1.3%, the S&P 500 declined 1.2%, and the Nasdaq Composite dipped 1.3%. Still, all three averages are now on track to close the month more than 1% higher. Meanwhile, the 10-year U.S. Treasury yield surpassed 2.41% for the first time since May 2019. The yields received a boost at the beginning of the week when Federal Reserve Chairman Jerome Powell vowed to be more aggressive on inflation. As a reminder, the Fed last week raised interest rates for the first time since 2018. San Francisco Federal Reserve Bank President Mary Daly said on Wednesday that she is open to raising interest rates by 50 basis points in May, adding to a more aggressive tone by the central bank. Against this backdrop, the dollar regained the upside momentum to climb back to local highs just below the 99.00 figure that capped gains at the start of the week. As such, the Euro USD fell below the 1.1000 to extend gains to the 1.0960 zone that has been capping losses so far. Meanwhile, oil prices jumped back to $120 a barrel, along with natural gas after Vladimir Putin said that Moscow will seek payment in rubles for natural gas sales from unfriendly countries. The market was also supported by the news that crude exports from Kazakhstan's Caspian Pipeline Consortium terminal had completely halted following storm damage. However, gains in the market were capped by reports that the United States and its allies have made progress in Iran nuclear talks. Following the broadly negative cues from Wall Street, Asia-Pacific stocks on Thursday were mixed on Thursday, as volatile commodity prices added to concerns to investors amid the impact of an ongoing military operation in Ukraine. China's Shanghai Composite was down 0.39%, and Hong Kong's Hang Seng gave up 0.29%. Australia's S&P ASX 200 managed to finish slightly higher, aided by gains from materials, mining, and energy stocks on higher commodity prices. The Nikkei 225 in Japan gained 0.25% after the data showed that the country's manufacturing sector continued to expand in March. Later today, Biden is scheduled to meet other NATO allies in Brussels and is widely expected to impose further sanctions on Russia. The U.S. leader is also expected to meet European Union leaders to discuss an embargo on Russian oil by EU members. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.